Hello, and welcome back to my YouTube channel. My name is Wendy Daniels, and I am a bookkeeping professional. I have been servicing clients by providing bookkeeping services for about 24 years. And today, in my second YouTube presentation, I will be talking about what is a P&L, or profit and loss statement. So, as a small business owner, entrepreneur, or nonprofit founder, you need to understand what a P&L is, how to read it, and the difference between a P&L and the balance sheet. First of all, if you watch the video that I referenced in my first video, Bookkeeping 101 by Life Accounting, you understand that bookkeeping is all about tracking, understanding, and interpreting your income and expenses, right? What do your financial reports tell you about your business? There are several financial reports, and the most important one is your profit and loss statement. Now, because the accounting industry keeps changing the terminology for financial reports, remember, I'm a bookkeeping professional, not an accountant. This financial report, which lists your income and expenses during a certain period of time, has many names. It can be called a profit and loss statement or report, or P&L, an income and expense report, an income statement, or a statement of activity, or SOA, statement of activity. These are all the same thing, although the statement of activity tends to be used for nonprofit organizations rather than the terminology P&L. This report lists your income and revenue by category and total, and your expenses or expenditures by category and total. Then it records the total of your income minus the expenses as your net profit, which will be negative or positive. And you have to understand that the P&L only lists your income and your expenses during a certain time period. If your time period is for the month of January, then your P&L, or your income statement, or your statement of activity, is only going to list your revenue and your expenses during the month of January. If your time period is the first quarter, it's only going to list your revenue and your expenses during January, February, and March, and so on. So it's important to realize that your P&L, your statement of activity, is not going to tell you how much money you have in the bank. It does not take into account the money that was already in the bank when you started off a certain period. So let's say if you were running a P&L for 2021 from January through September, your P&L only lists the revenue and the expenses for January through September. It does not take into account the money that you had already in the bank before January 1st, 2021. It also does not take into account any loans or leases, the types of expenses you have that are actually liabilities, and they are recorded on your balance sheet. So when you pay these expenses, they are not recorded on your profit and loss. So that is another video that's a little bit more complicated, and I'll explain that in a different video. But what I want to do right now is give you a very simple example of what I mean by having your income and expenses during a certain period of time and not having your revenue or your expenses from a previous year reflected during that period of time. So if you look at this very, very simple income and expense report that I have here, profit and loss, Wendy's Wonderful Watermelons for the first quarter, January through March 2021. You see that I listed the income: web customers $30, store customers $70, the total $100. So that would be my revenue. Now let's say before January 2021, I already had $100 in the bank. So that, just remember that part. Then my expenses during that same amount of time, January through March, I spent $40 on watermelons and I spent $10 on shipping. And so my net profit is $50. So I actually did make a profit. My revenue was $100, my expenses are $50, and my net profit is $50. So does that tell me how much money is in the bank? No, because I started off the year with $100 already in the bank. So at the end of March of 2021, I actually have $150 in the bank, not $50. So I just want you to be clear on that the P&L only explains the revenue during a certain period of time. It does not take into account money that was already in the bank before that period of time, nor does it take into account expenses or expenditures which are reflected on the balance sheet. So if you have any questions about that, put them in the comment area. If you like this video, please like it and subscribe if you haven't subscribed. Again, my name is Wendy Daniels. My company is Books by Wendy, and I am here to help you as a small business owner or as a leader for a nonprofit. I want to help you to be successful in your business, in your organization, so that you know what's going on with the money and you understand whether or not you are making a profit or whether you are making or whether you have a loss, or whether or not you have a loss. All right, thank you.